Christian was asking, I've always heard that the first 100K is the hardest and then it's somewhat easier. Why is that? It's a good question.
I feel like this is a good one for you.
Well, I just would say one word, compounding, right? Oh. It's a lot harder to go from 10,000 to 100,000, 10x, right? Than it is 100K to 500K. And once you have more capital, you can better diversify. You can take higher risk, but higher reward opportunities. You can get into VC stuff. You can properly trade crypto and properly trade equities and be more tactical with more money. I think we talked about this last week, actually, quite a bit. But the more money you have, the larger the number becomes with compounding, right? Mm-hmm. That's why they say invest early, right? What do you guys want to add to that?
Yeah, I mean, capital begets capital, or another way to say it is the rich become richer generally. And then the reason for that is, like you said, like generally you get to a certain level and you can stop using capital for basic needs and start putting that capital into riskier investments. That's why rich people invest in things like VC, stocks, real estate, high yielding assets, assets that can essentially just continue to compound and grow capital. So, once you get past the level of like your debts are paid off, maybe even you own property and cash, and so then your money just really starts to work and compound for you.
Yeah.
Mm-hmm.
And you open up more opportunities of places you can invest as well. And I mean, once you get ultra rich, then you have teams of people working for you to make your money grow.
Yeah.
Yeah.
One example is just, I've talked about this so many times this year because it's my best performing asset, the managed futures funds, right? It's like a lot of those funds are a minimum of 100K, $500,000 or $1 million. And that's not even a high risk thing, right? That's just a way to leverage futures. And like if the markets go down, you're going to do well in those. So even access to stuff like that can really help, where if you have less than $1 million, you're not getting in. And that's why, the accredited investor rules are just still, I think, way too out of whack.
Mm-hmm.
Yeah.
Mm-hmm.
Yeah, I guess like getting to that first 100K, it's kind of, like you guys said, it's compounding and the numbers are smaller. So it just feels like it's taking so long. But consistency is key. And I think that's part of the problem is in that beginning stage, you have to be super consistent and super disciplined. And, that's tough for a lot of people. So that's why it feels like so difficult.
Yeah.
But then once you get there, it's like, okay, yeah, all right, compounding is zooming, right? So I think that's part of it too, is just that feeling of just having to be disciplined and consistent.
And avoiding permanent
in the
capital
beginning.
loss.
Yes.
Yeah.
Mm-hmm.